Can I refinance a hard money loan? In this video, I'm going to share with you some options available outside of your traditional, conventional financing loan products. As you know, I specialize in a lot of non-qualified mortgage options that would be geared towards individuals that are unable to provide traditional loan documentation such as pay stubs, tax returns, things of that nature. So in this video, I'm going to share with you what those steps look like for someone that is, say, doing the BRRRR strategy, perhaps bought a primary residence using a hard money loan, and their loan is now up for maturity. So they need to, one, either pay off the loan or refinance it. So let's get right into it. My name is Candy Katz. I do drop weekly videos on mortgage tips and investment hacks. So if you're new here, welcome. Be sure to hit that subscribe button and the bell to get notified on my weekly videos. Let's get right into it. I'm going to break down a few of the things to make sure you're aware of before applying for a mortgage to refinance. Okay, let's touch on income. The product that I'm speaking of is a note ratio or a DSCR product. Okay, so the note ratio is applicable for primary residences, and the DSCR is your debt service coverage ratio for your investment cash flowing properties. Guidelines are very similar. Requirements for each parameter from income, reserves, credit are pretty similar. So let's start with the income. No tax returns or pay stubs are needed, and gift funds are accepted for primary and second homes. Credit. It is highly encouraged to have a minimum of 640 and above. 640 would require a minimum of 35% down, whereas if you have credit scores of say 680 and above, you can get away with 20% down. The higher the scores, the higher the loan to value, max at 80%. And of course, the higher the score will give you a more attractive interest rate. There are fixed rate options, and then there's also the interest only. So going into reserves, sometimes people have been impacted on qualifying for loans because they had recent large lump sums deposited that they needed to wait to be seasoned. It could be where they didn't have enough reserves for what was required. For these type of products, whether you own 5 homes, 10 properties, they only need reserves for the subject property that we're refinancing. Be prepared to have a minimum of 3 months just to be safe. So what does that mean? If your mortgage payment is $2,000, make sure you can prove that you have more than $6,000 in your accounts, whether that's your savings, checking. You can use proof of life insurance, stocks, bonds, mutual funds. All of those are applicable to the source of accounts that we use. We typically ask for the last 2 months' bank statements. Now, if you're not able to show your reserves that way, we can also request what you call a VOD, which is the verification of deposit. If you are refinancing this property and don't have reserves, the beautiful thing is the net proceeds from your cash out refinance can be used as applicable reserves to qualify for the loan. And lastly is your loan size. If you're needing loan to value of 65 or higher, we can go up to 1.5 million. And if you're loaning less than 65%, we can go up to $3 million. So overall, this is a really strong product for someone, like I said, looking to refinance their home that they bought via cash and don't have traditional documentation. They can still now recover a lot of their equity through this product. And then even for your investors that maybe just quit their job or they don't have the last 2 years tax returns, is a very common scenario for contract workers, 1099 wage earners. that cannot provide the traditional paper trail. This would be applicable for you, and I think it's very advantageous because it's just a simpler product. Some of the things I want you to take away is it is a slightly higher interest rate, of course, due to the not so stringent guidelines, a ton of assets, and they're just looking for alternative financing options. Because the deals are abundant, sellers are more inclined to provide seller contributions, maybe even your agent is giving you some proceeds. 2% is allowed on investment purchases and up to 6% on primary purchases. So now that you know the guidelines, the next steps would be, let's take a look at your credit so we can gather the necessary documents. The Apply Now link is in my description below, but if you'd like, shoot me an email, send me a text, so that way we can schedule some time for you to connect with my team so we can get the ball rolling. Thanks so much for dropping in today. Hope you found this information helpful. I look forward to continue building that portfolio with you, and I'll see you guys on the next one.